Okay, for the illustration for LCNRV, so this example. So you have inventory on December 31, 2019. This is last year ending balances. So you have skis ba ni or jet ski or skis, boots, ski equipment, ski apparel. So again, di ba? We measure the inventory lower between cost or net realizable value on an individual basis or item by item basis. So again, so item na to, so di na to sa i-accumulate, i-total. So this money composition sa imong inventory. So you have skis, boots, ski equipment, and ski apparel. So the net purchases for 2020 is 20 million. And the inventory on December 31, 2020, so you have the cost and the net realizable value. Okay, so let's start first with the beginning inventory or the ending inventory for December 31, 2019. So we need to identify, di ba, lower between your cost or net realizable value. Okay, so this can say mas lower. So let's highlight lang. So cost, kaning boots, and RV. You have ski equipment, lower ang cost. Ski apparel, lower ang cost. Okay. So therefore, ang lower dire is 3 million. Paano ito? LCNRV. It's lower. That's 3 million. That's 800,000. That's 700,000. Okay, so if you prepare the journal entry on December 31, 2019, di ba, we have direct method. Okay, we have direct method. So under direct method, di ba, we record the inventory directly lower between the cost or net realizable value. So therefore, the LCNRV, bata na to pila total aning cost, pilang total aning NRV, pila total aning LCNRV. So again na, dili ta kay kung tan-awon na to dire, 5 million, kung atong i-total siya, 5 million versus 5.3, 5 million ang answer. Pero, again, inventory is measured on an item by item basis or individual basis. So, isa-isaw na to siya. So, under direct write-off method, direct method, so our entry is inventory end, credit, income summary, pwede po sa cost of goods sold, cost of sale. Question, pilang amount? Again, under direct method, we record the inventory lower between the cost or net realizable value on an item by item basis. So, kanita, pila man ang total ani, that's 4,800,000. Therefore, for direct write-off method, that's 4,800,000. This is for 2019. It's 4,800,000. Okay. How about under allowance method? Ayun na lang ta, allowance method. Okay, diba? Under allowance method, we record the goods or the inventory at cost and then we adjust it if na write down, loss on inventory write down. So, since at cost man siya, record ta inventory and income summary or cost of sale at cost at 5 million. Diba? Kay at cost man siya una i-record. Then, let's compare if pila ang difference. Okay, pila ang difference niya. You have cost and the LCNRV. So, you have 5 million na cost versus the 4,800,000 okay, minus or versus the 4,800,000. Okay, so that's the cost nga 5 million. I-compare nato sa LCNRV nga 4,800,000. So, kinsa may mas dako, di ba? Mas greater ang cost to your LCNRV. Therefore, naatay loss on inventory write-down nga 200,000. So, 5 million minus 4,800,000, mas dako man ang cost compared to the LCNRV. Take note na LCNRV atong gamiton, dili ang NRV. So, LCNRV, so natay 200,000. So, we have 200,000 nga loss on inventory write-down. So, again, under allowance method, how do we account? We have loss on inventory write-down. That's 200,000 credit allowance for inventory write-down. That's 200,000. Therefore, at the end of 2019, the balance gapon sa imong inventory is same with direct write-off method, di ba? So, you have inventory debit minus the loss on inventory or minus the allowance for inventory write-down nga 200,000. That's 5 million minus 200,000. Still, the balance of your ending inventory is 4,800,000. Same with using direct write-off method or direct method. This is for 2019. How about on 2020? Siyempre, on 2020, this is the transaction for 2020. So, first, you have okay, 2020. So, that's 2020. You have net purchases. So, punta na lang nato net purchases, your debit purchases. And on account basis ta. Then we credit accounts payable. So, the amount is 20 million. Then, on 2020, under direct write-off method, same sa direct write-off method, same pod sa allowance method. So, you have purchases, you have accounts payable, that's 20 million. How about the ending inventory? Okay, so ending inventory for 2020, so same sa itong gibuhat kagaina, let's NRV. So, let's compare kinsa ang lower, di ba? So, that's 3,250, so lower ang cost. Sa boots, lower ang NRV. Sa ski equipment, lower ang NRV. Sa key apparel, lower ang NRV. Therefore, this is 3,250, 800, 750, 450. Pilay total cost. At 6 million, pila ang total NRV, total LCNRV. Okay. So, under direct write-off method or direct method, sa entry niya, with ending inventory for 2020. So, that is, copy lang nato ni inventory end. Okay, inventory end. Pilay amount, that's lower, di ba? Pag direct method, lower. So, therefore, 5,250. So, that's 5,250. That's 5,250. Okay. Okay, so dala lang, diretso lang sa direct method. How about sa atong allowance method? So again, we record under allowance method, we record the inventory at cost. Come summary or cost of sale. Okay, so inventory end at cost, that's 6 million. And then 6 million, credit 6 million. So this time, kung i-compare nato naabay, loss on inventory write-down na itabo. Okay, so you have cost of 6 million versus the LCNRV of 5,250. So 6 million versus 5,250. Okay, naabay loss on inventory write-down. Yes, naay loss on inventory write-down. Pila man na. That is 6 million minus 5 to 50,000. So you have 750,000 nga loss on inventory write-down. Kanang 750,000 manatong gitawag nga required allowance. This is the required allowance for the loss on and this is the required allowance or the ending balance of the allowance for inventory write-down account. So required allowance or ending end balance. But if tanaw na to atong T account, if you prepare T account for the allowance account, allowance on 2020 on inventory write down, diba we have debit balance okay, we have a debit balance. Okay, beginning balance from 2019, pila to? Allowance na to. You have 200,000. This 200,000. This is the beginning balance. And right now, the required allowance is 750,000. Again, required allowance is the ending balance. Okay, so this is the ending balance. Bilang end, that is 750,000. Therefore, to get the balance, so dapat magdugang ta diri og pila man ato idugang, that's 550,000. Tama ba? 550,000. Unsa nang 500,000? Mo ni ang increase. Diba? Based on the T account increase or additional loss on inventory write down. So therefore, if there is additional loss on inventory write down, unsa tong entry? So we debit loss on inventory write down we credit allowance because there's an increase. Allowance on inventory write down. So that is pila increase? 550,000. Okay, so kana lang, di ba? Mo ni atong entries. Diba yung kagaina, either aha nga method, you'll still compute the same cost of goods sold. Di ba? So sige, try na to. Compute ang cost of goods sold na to. And also, di ba, the balance of the ending inventory of 5 to 50 using direct method under allowance method, that's 6 million minus 550. 6 million minus 550 dili si equal. You have the napamangkay 200,000, di ba? The ending balance is 750, so that's 6 million minus 750, the required allowance. So that is equal gyapon siya sa 5,250. Okay, so let's prove kung same ra ba ang cost of goods sold. So under direct write-off method, you have direct method and you have the allowance method. Okay. So they have beginning inventory. Pili beginning under direct write-off method, di ba this ending 2019, so the beginning inventory is 4,800,000. Okay, for the allowance, so the beginning inventory is 5 million. Okay, 5 million ang beginning inventory. Okay, wala pa natin i-consider ang katong allowance niya nga account. Tapos, purchases, same, that's 6 million, 20 million. Sorry. That's 20 million. 20 million. Then you have the goods available for sale. Then you have the ending. Minus the ending balance. End na lang, end. Of inventory, under direct method, you have 5,250. Diba? 5,250 eh. In there, you have 6 million. So, cost of sale, you have 19,550 and 19 million. Diba? So, on 2020, the loss on inventory, diba? The treatment of the loss on inventory write-down is added to the cost of sale. But this is how we treat the loss on inventory write-down. So, it is added to the cost of sale. So, loss on inventory write-down, that's 550,000. Therefore, the cost of sale under direct method is 19,550,000 and the cost of sale under allowance method is the same. So regardless what method inyong gigamit, dapat same gyapon siya og cost of sale result. Okay. So ana lang ang problem. Sir, what if katong naay gain? So ben so nato ni para naay gain. So ato lang sang i-adjust ang kaning naa dire. So let's assume na tang nato the LCNRV ilisan nato. So ubsan nato siya. Instead nga 750,000 ang required allowance, dapat natay 150 lang. Okay, bata na to 150. So pilay difference dapat 5,950 ni dire. Okay, so let's assume nga 6 million versus 5, dili na lang ta sa ubos ha. Let's assume nga 6 million ang cost versus natay 5 natay LCNRV on 2020 nga 5,950. Therefore, na ay difference na 50,000. That's 6 million. So, the required allowance now is kapilang na to ni so, the required allowance now is 50,000. but the beginning balance is 200,000. Therefore, to get the ending balance of 50,000, okay, to get the ending balance of 50,000, so dapat mag-minus tag, mag-debit tag 150,000. So, debit, that is decrease, that is the gain. Diba, gain on inventory write down. So that is the gain on reversal of inventory write down. So what is the entry? Okay, so the entry is you debit allowance account, debit allowance, on inventory write down, then you credit gain on reversal of inventory write down. Pila? That's 150,000. So again, gain on reversal is deducted to your cost of computation of your cost of goods sold. So this is deducted in the computation of cost of goods sold. So sige, nangit pa ito ibuhaton na simple pa ba? Okay, so basta take note that the gain on reversal is only limited to the previously recognized loss. So kung what if moabot siya og 300,000 ang gain on reversal, dili na mo sa i-record as 300,000 ang gain. Limited lang ta sa 200,000 because this is the previously recognized loss on reversal. Okay. So limited lang siya sa allowance sa imong gi-record. I mean, allowance. So limited lang siya sa allowance sa imong na-record previously. So kung 300,000 ang gain, dili dapat 300,000 up to 200,000 ra siya. So just take note of that. Okay, so let's proceed with the purchase commitment. So, nana lang ang transaction under LCNRV. How about purchase commitment? This is the example. On November 15, 2013, Diamond Company entered into a commitment to purchase 10,000 ounces of gold on February 15, 2020 at a price of 310 per ounce. So, on November 15, nakig-agree, ni-commit si Diamond Company nga mopalit siyag 10,000 ounces of gold on February 15 at a future date at a fixed price of 300 pesos per ounce. So, ni-commit na sana. So, regardless pila ang price, iyang bayaran 310 pesos. So, here comes December 31, 2019. Sorry, dapat 2019 eh. Okay, December 31, 2019, the market price of the gold is 270 per ounce. So, di ba 310 imong gi-commit tapos pag abot og December 31, himong 270 ang gold. So sa imong nga part lugi kag 40 pesos, di ba? Gansi kag 40 pesos because 310 imong dapat bayaran, fixed price regardless kung pila ang price sa market. Okay, so on December 31, nakay 40 pesos nga lugi. So that's why nakay loss on purchase commitment, that's 10,000 times 40, that is 400,000. This is on December 31. Okay, so naka-estimated liability on purchase commitment 400,000. So on February 15, on the date of actual purchase, di ba diri man ka mag-actual purchase 2020, the price of gold is 300,000 per ounce. So, nahimo sa 300,000 from 270, nahimo sa og 300 pesos. So, na difference nga 30 pesos. So, katong 30 pesos, loss to or gain? So, gain kay ni-increase balik ang price, di ba? So, ay salamat, i-increase balik kay gamay, di ba? So, that's 30 pesos. So, on the actual purchase on February 15, again, purchases is recorded, di ba? Lower between the fixed amount or the actual cost of purchase. Therefore, kasi mas lower, the fixed amount is 310 pesos, the actual cost of purchase is 300 pesos, so lower ang 300 pesos. That's why 3 million because lower between your fixed price and the actual cost of purchase. The estimated liability for the previous tier, so debit lang nato 400,000. Then again, accounts payable is recorded at amount at fixed price, di ba? So at 310 pesos. Therefore, the difference is you have gain on purchase commitment 300 pesos. Again, yun sa pag-compute ng gain on purchase commitment, the difference from 270 to 300, 30 pesos times 10,000 ounces. So that is gain on purchase commitment 30,000. Sir, what if ang naitabo in ani? Instead nga 300, assume na to ha, nahimo sa og instead nga 300, dahil mo sa 320. Ito mong entry. So, actually, same lang December 31. Dito mag-differ sa purchases. So, again, your purchases is lower between the fixed price and the actual cost of purchase. Kasi mas lower, 310 or 320. So, 310. So, that is 3,100,000. Estimated liability is the same. Liab. That's 400,000 yapon. And the accounts payable still equal to the fixed price. Again, always sa fixed price ha. So, pila yung difference. So, you have gain on purchase commitment at 400,000. Take note guys, diba, gain on purchase commitment is also limited to the previously recorded loss on purchase commitment. Diba? Pero kung tanaw ninyo, 270 minus 320 na ay 50 pesos. Nga difference, nga increase. So 50 pesos times 10,000, that should be 500,000. But again, according to the standard, the gain on purchase commitment is only limited to the loss previously recognized. So, pila ang maximum loss nga itong i-recognize? That's 400,000. Therefore, dili dapat sa mulapas. That's why 400,000 ra gihapon atong gain on purchase commitment. Okay, so that's all for this chapter. So, I hope you've learned something and also ma-apply ninyo ang illustration or nasabtan ng illustration and even the discussion.